IUL is the miracle solution to any long-term financial goal. Get ready. We're talking about business. We're talking about real estate. We're talking about if you're a school teacher, police officer, firefighter. We're talking about maximizing your pension, getting far more money and having more flexibility. Emergency funds. I use property structure max funded IUL because it makes me immune from taxes. Why would you generate this much income when you generate double or triple that? And at the end of the day, why would you leave behind only this when you could leave behind double or triple that if it doesn't cost you anything? Why would you choose the most expensive life insurance policy you'll ever be sold with no flexibility when you can have your own private one that'll be far better? So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist now for 5 decades, helping thousands of people in America optimize their assets, minimize taxes, and empower their authentic wealth. Now, if you've watched very many episodes on this three-dimensional wealth channel, you'll quickly realize my favorite solution, financial instrument for all kinds of long-term financial goals, without question, is a property-structured, maximum-funded, indexed universal life insurance contract. If it is structured correctly and funded properly, which unfortunately many IUL agents in America do not know how to do. That's why I have a special training organization called IUL Insiders for IUL agents to teach them how to do it correctly. When you do, it knocks the socks off of other types of financial instruments for long-term goals. Now, when we talk about long-term, generally speaking, I'm talking about in a goal that's 5 years or longer down the road, such as retirement, maybe college funding for your kids or grandkids. Maybe it's an ongoing working capital account for your business where you can keep the money there to buy inventory and invest and buy up properties or whatever if you're a contractor or developer or what have you. If you're a real estate investor and you own several rental properties, this becomes the repository to keep your money liquid and safe, earning a rate of return that, for me, has been at least triple the net cost of borrowing the money on mortgages or construction loans or whatever. And it actually will help you have enough money about 2.5 years faster to totally be out of debt or pay off all the mortgages on your property rather than giving the money to the mortgage company in extra principal payments. I prove that in my books. We're talking about business. We're talking about real estate. We're talking about if you're a school teacher, police officer, firefighter. We're talking about maximizing your pension, getting far more money and having more flexibility. Emergency funds. I call a max-funded IUL a financial Swiss Army knife. It is the dream solution to many financial goals. And so when I speak to audiences, many times I will ask this question. So folks, what would you call something that you put money into and it grows at a nice average rate of return of 7 to 10%, but if you keep it diversified, and I'm not talking about reading the Wall Street Journal every day. I'm talking about once a year. You simply meet in a review and you diversify and you rebalance the portfolio, change around the allocation to certain indices, that you could then move your rate of return up to 11% and even 14% average rates of return based on actual history. But if you can earn, let's say 11, you can earn a retroactive back to the first day you open the account. Within 1% of that gross rate of return of 11, you can net over 10% cash on cash. People go, what do you mean by net? I'm talking about you can earn 10% and the insurance that's coming along for the ride is like free. It's being paid for with that 1% of money that would otherwise go out the window in unnecessary tax. In other words, you would have to be earning 15 or 16% in a tax-deferred IRA or 401k to net 10, because most people, when they retire, they have to pay tax. And so if you had $1 million nest egg, you'd have to pull out $150,000 a year to net $100,000 to buy gas and groceries. Now, you're going to deplete that $1 million nest egg in 11 years if you do that, even if it was earning 10%. Truth be known, most people who have money in the market at retirement, according to L.A.S.E.R, are only averaging about 3.5%. And so the financial services industry only wants you to pull out 4% a year, which is pathetic. It's unacceptable to me. I don't accumulate $1 million nest egg to have a measly $40,000 a year of income, and I have to pay tax on that. I'm only netting $30,000. And so when I tell people, what if you could have something that would generate double, triple, even quadruple what money in the market in an IRA or 401k will net you after tax and fees? And they go, absolutely. So when I ask people, golly, what would you call something that accumulates your money tax-free? You can access it tax-free. When you die, it blossoms and transfers tax-free. It increases in value, and they go, a miracle, a dream solution in this topsy-turvy, unpredictable world that we're in. Yeah. See, I use property structured max-funded IUL because it makes me immune from taxes. When taxes go up, it doesn't affect me because these are tax-free. I don't like inflation any more than you probably do, but it doesn't hurt me because I link my returns to the things that inflate. I've always earned a rate of return of about 5.5% greater than the inflation rate at the time or more. Back in 1980, after the Carter years when inflation hit double digits at 10%, I was credited 15.5% on my universal life. During COVID-19 and the year after that, when inflation hit over 15%, okay, many people with IUL, our clients, they got credited 25% and even 61.33% because we're immune from inflation. You can outpace inflation. And the third big danger that causes most people to outlive their money besides taxes and inflation is market volatility. By using indexing, my money is not at risk in the market. I get to benefit when the market goes up, but I don't lose when the market goes down because my money's not in the market. But the insurance company is crediting me what the market does if it goes up, but if it goes down, I don't lose. Zero is my hero. I don't make anything, but I don't lose. And Will Rogers once said people get more concerned about the return of their money, so the return on their money when things go bad. So this is why a property structured IUL policy is the dream solution for not only retirement, it'll knock the socks off of traditional IRAs or 401ks, but what about other long-term goals? When we talk about 5 years or longer down the road, it could be money that you're earmarking as working capital for your business. I have many savvy business owners that have anywhere from $50,000 to $5 million in max-funded IUL as working capital accounts, where they use that money to run their business, to buy inventory, to buy or tie up properties to be able to develop or build on. And they do that, and whenever they need money, instead of having their money sitting in some bank or credit union earning less than 1%, they have it in their IUL. And they call me up and just say, Doug, I need $1 million to have some earnest money to tie up this $17 million strip mall I want to buy and fix up. And so they do that and they borrow $1 million, and they actually borrow instead of withdraw because they understand how money works. They say, well, you can charge me 5% on borrowing. That's a pretty good rate. So if they borrow $1 million from the insurance company using their policy as collateral, that means the $1 million in the policy continues to earn the indexed rate. In 2017, my client got credited 25% that year. They made $250,000 on $1 million of their policy that was collateralizing the $1 million loan. They were charged 5% on. They were charged $50,000. They don't have to write out a check for that. That was deducted from the $250,000 they got credited that year. Their net profit was $200,000 or 20% tax-free on that $1 million, while they were actually using $1 million from the insurance company to make $3 million in their real estate. Many savvy real estate investors do this. Business owners do this. We have school teachers, police officers, firefighters. that when they go to retire, many times they sit down with their, human resources person or whatever, and they are told, okay, you've taught school here in our state for 30 years, so you're going to get 2% for every year of service. So 2 times 30 years is 60% of what? The average of their last 5 years' paychecks. So let's say that ends up being, let's say they were making $100,000 a year, which is $8,333 a month. If you get 60% of that, that's $5,000. Okay. So they're going to get $5,000 plus a little cost of living increase each year. But let's keep it simple here. That's $5,000 a month. Now that's their defined benefit pension. And then they go, so would you like to share this asset with your spouse? Because $5,000 a month is $60,000 a year. If you live 20 years, we're going to have about $1.2 million on hand in order to make sure you get this $5,000 a month the rest of your life. Don't you want to share that $1 million asset with your spouse if you happen to die sooner than later? They almost put you on a guilt trip. Oh, I guess. Well, then you'll need to take less. If you'd like your spouse to continue to receive 100% of what you're getting, you might have to reduce it down to $3,600 a month. So they cut your income $1,400 a month without telling you they just sold you the most expensive life insurance policy you'll ever buy with hardly any flexibility, which means if your spouse dies before you do and you get remarried, you can't rename a new beneficiary, okay? You have to die first in order for your spouse to keep getting that benefit. You might get a 50% benefit. So, I can't give up $1,400, but I'll give up, $800. Give me $4,200 a month, and then give my wife $2,100 a month, or my husband if I die. That might be a 50% survivor benefit. It's still way too expensive. Here's what I would advise them to do. Take the $5,000 a month no survivor benefit. Take the differential, the $1,400 or whatever, or the $800, and put that into a max funded indexed insurance contract. And now you will not only have enough money to be able to keep going, but if you pass away first, your spouse will have the money inside of that to keep the income going. But if your spouse passes away before you do, you're not out the money. Because you can rename a new beneficiary. You can pass it down to a new spouse if you get remarried, or to your kids or to your grandkids. With a defined benefit pension from the state, you can't do that. And so why would you choose the most expensive life insurance policy you'll ever be sold with no flexibility when you can have your own private one that'll be far better? There's all kinds of ways that a property structured max funded IUL is the miracle solution to many goals. An emergency fund, for estate planning, for understanding really how to become your own banker and to maximize what you're leaving to your children. Why would you generate this much income when you generate double or triple that? And at the end of the day, why would you leave behind only this when you could leave behind double or triple that if it doesn't cost you anything? People say, well, what do you mean it doesn't cost you anything? Yeah, everything I'm talking about is net. If you want to understand more about this miracle solution, because I'm still shocked how many Americans do not take the time to learn, you'll see this knocks the socks off of traditional IRAs or 401ks, mutual funds, municipal bonds, annuities, if it's structured correctly and funded properly. So this is how to diversify and create the foundation for a tax-free retirement. This book is flying off of our warehouse shelves. We send out a couple of thousand of these a month, and people send us thank you notes all the time. It retails on Amazon for $20 plus shipping. I'll pay for the book, and I'll gift you a free copy, but I require a little bit of skin in the game. You simply go to laserfund.com or click on the link below, and you contribute a nominal amount towards the shipping and handling. I'll cover the rest of that cost, and I'll pay for the book. I'll fire out a hard copy to you via priority mail. And while you're in there claiming your free copy, if you'd like to listen and learn or watch and learn, check out those formats. You can even get a book bundle. This is my second best-selling book, The Entitlement Abolition. Many people buy the bundle because it's less expensive that way. and it's not expensive really at all. But there's master classes. You can even attend free educational webinars that we teach on a regular basis. Register for some of those. But you can even schedule an appointment online to talk to a certified IUL professional that can show you how a property structured miracle solution IUL can benefit you in your particular circumstances with no cost or obligation. I always ask, is that fair enough? Yeah. Take action now. Claim your free copy.